So in this video, you're going to see how the London Breakout achieved us just under 10R in a single trading session, and how you can set up your charts effortlessly almost every morning to try to achieve the same. Okay, so I wanted to go through how the London Breakout worked extremely well a couple of weeks ago. I'm doing another video to show just how well it worked this week as well, and how you can capitalize and get the most out of it, and see just how we trade in FTR, with the London Breakout being one of the strategies that we try to take part in every single day. So just to explain this in a nutshell and keep it really simple, what we do is we look at the Asian range, which is what had happened overnight UK time on pound US dollar. So if Asia has been ranging a tight range and it's bouncing back and forth between the highs and lows like this, you can expect pretty much before the London session, which we actually did a London breakout at 7 a.m. If price breaks out with a body on the 5 minute time frame, which we use, if it breaks out with a body, we're looking for an order block pullback. Okay, so if there was an order block just before the break, then we'll try and pull back into there and target one of our areas. Alternatively, what could happen is that you could have a tight Asian range again. That there is a way where if it's been sort of trending, but if it's a tight Asian range sort of going down, but we get a wick break, so price breaks out and then comes back in, then we use a different type of order to be able to get in and capitalize and make the most of that very minor pullback and tag in on the momentum of that train. So there's multiple ways of taking the entry, but there's actually only sort of like two ways which we really pay attention to. Now, to take profit, ideally we want to be taken out of the market when it's decided that it's had enough. Alternatively, we can look to a higher time frame, for example, the 15 minutes, and try to feed it just to the end of an imbalance. So we try to feed it to an order block where we might have an issue with supply or demand, and price could come back against us. So I'm just going to take these concepts away with it and show you on the charts just what happened. Okay, but before I do that, I'm just going to show you as well that if price has been sort of trending in one direction like this, and it sort of starts playing about before the breakout occurs, then we need to be really cautious and try to get the best type of trade entry as possible. And ideally we want a minor pullback, an aggressive breakout with a body, and then come back to this order block again and then feed it to where we want it to go. And it's just the same every single morning. It's really simple. You tend to do it before you go to work and stuff. So, and it tends to work. I know it's a little bit tricky for the guys in the US. It's like 3 in the morning for you guys, but it's worth doing. It's consistent. It's easy. You don't have to think much about it. And it is consistently profitable over time. So here's the trade in question. Okay, it was Monday the 19th of May. And I'm starting this off from the start of the session. Okay, so the start of the session is the Asian session. It's midnight. I call it midnight UK time to actually 7 a.m., which I know is the European breakout, but really it's when the volatility starts and Asia more or less ends. Okay, so what I do is I drop down to the 5 minutes, and when I wake up, which is, to trade this properly, about 6:30 in the morning. And I know in the US you're looking at, 2:30, 3:30 perhaps, like maybe even 1:30. It's a bit of a tricky time for the US guys, but in reality, it's just the time in which it happens. So, I'll wake up and typically the market will look a bit like this. Okay, so I'm going to stop it when it gets to about 7. Okay, so it's 6:55 right now. So I'll be already at my charts and just marking this up. So I'll be looking at the high and I'll be looking at the low of the session, because all I'm looking for is a breakout in either direction. Don't care which direction, and I don't care about the rest of the FTR confluences. Okay, so with this, it's a standalone strategy. It's what I helped build FTR based on. Okay, so with this, again, all what we did on this morning, which was taken quite nicely by one of my mentees, which I actually finally decided to start doing some mentoring, and it was actually quite fun. It improved me as a trader as well, so I'll be doing it again. But this is what happened. Okay, we got the breakout with a wick. Now what I do is I drop down to a lower time frame because I find it easier to get a precise entry, but you don't need to. Okay, you can stay on the 5 minute, but I'll just copy out what I did. So drop down to the 1 minute, and I've got the pending order waiting. Okay, so I've got the order on there, and my stop is literally right at the lowest point where price came to. Because what I want is that if price just continues down and comes down, then comes up and then down, I'll cancel the order, okay, because it's firmly gone back in the range. But the fact is, on the 5 minute, it closed with a bullish candle. It's saying to me it still wants to break out, but I don't want to be caught out with a like a pending order where I'm tagged in, so a limit order. Okay, I know that there's potential for a little order block here or there or whatever, but not really. Like this is slightly different the way that I trade it. Now, we'll just wait until there's a tag. Okay, so I'm literally just waiting to see if price pulls back right here where it's created a potential sort of like mini high inside. If it was to come down now and close back in that range, I would cancel this order and get off the charts for this. So I'm just going to click on, and after, I don't know, an hour or so, it's now, oh, sorry, it's 7:31. So it takes half an hour to get the breakout in this instance, but we're tagged into the trade. We're tagged in a momentum trade. Okay. So a bit of an impulse, really. Now, what I do at this point is I switch to the 15-minute and I look to see where there's going to be any possible targets to reach. So I do this beforehand, but I'm just sort of going through bit by bit for you to understand. Now, if I set my target here, okay, it's less than 1 hour. That's not good standard in any form of trading. So that is not going to be good enough for me. And I'll look over to here and see, right, actually, there is a swing high all the way over there. So if I get that, it's looking quite good at 6R, which is good. But really, I want to try to find an area where price is going to be struggling at, which is usually going to be, in this instance, a supply zone. So I'll put this on here as well. But the best way, I think, anyway, to trade now, this may be subjective, but I prefer to be taken out of the market when the market is ready to take me out. And what I mean by that is, you know, the ATR, so the average true range of pound US dollar, which is what this is based on, so you go from the start of Asia to the end of the day and get the true range, it's about 100 pips, like 85 to 100 pips. So if I measure from the end of that range up to up here, 75 pips. That's quite realistic. That's a decent enough target for most people. But it doesn't mean that the market isn't going to come up here, start consolidating, then take off again, because it absolutely could. That's how you get trending days, for example. So I really don't want to be taken out of the market if I have access to my computer or my phone during a day. So for some people, set and forget, you set it at one of these targets and walk away, and that's fine. Just make sure that your target is at least, 3 or 4 hour away, so you have a profitable strategy over a period of time. But in my instance, what I do is I'll set the overall target which I want to do, and I'll set an alert. Okay, so I'll have an alert nearby. So if I hit the target and it starts struggling, I can back out. Or if the price decides to like CHoCH or create something like that in that instance on the higher time frame, definitely time to get out because I'll be trailing my profits. So I'll show you how that works. Okay, so price moves on and along, and as you can see, like it came down and literally retested that breakout zone. Okay, just that literal area. Like it's what happens. So price worked its way up, and within like another 45 minutes, we're already sat at around about, yeah, I thought it was about 4 hour, but nearly 5. And price just keeps on pushing. And this is what you want from a strong London session, a tight Asian session and then a strong, powerful London session to really start pushing it. Now, I'm looking for, an excuse really to get out at this stage. If it's going to get late into the London session, like, 11 o'clock or onwards, I want to get out the markets. But at the moment, it's only 9 a.m. So being sat there for like an hour and a half, 2 hours, already looking good. But nowhere safe to put my stop loss just yet, unless I was to take it at this target, which again would be absolutely fine. So market indicating that it might now be looking to reverse. So I'd be thinking in this instance, and I think I was thinking of getting out at this stage, thinking I should have just taken profit there, but just give it a little bit of time to play out. Okay. Again, pull back and then an aggressive move back up again. And if you know the FTR way of trading, this would have been an order block, but it's already rebalanced pretty much. So not interested in it anymore to try and scale in. But always try to scale in where you can if you've got the time availability. So anyway, we're going to keep on clicking forwards and see if there's anything really which is standing out for us as a sign to reverse. because at the moment it's floating at 11R, which is really good. And this is all like, pretty much set and forget. If you get alerts, like for example, if you're following the high like that with a alert on there, you set an alert on the high and you get a break at the high and then a break at the low on a swing. Like for example, my stop loss now is behind here. Sorry, I forgot to mention that bit. Stop loss is behind the swing. The difficult bit is like psychologically, you just need to prime yourself for this and do a load of back testing, a load of forward testing, and understand that this is still the best way to do it. You're floating at 11R. Okay, so let's say that you use £100 as your risk, you're up 1100 quid. For a lot of people, that's really good for a morning's work, but there's every chance that you could end up taking just 400, and you've got to make peace with that, okay? Because you don't know if this is going to go off to make 4,000, okay? So that's the hardest bit, understanding that sometimes it does come back and it takes you out for, a significant portion that you could have taken from the market. But just think, when it's equity, like when it's rolling equity in the account, it's not yours until you close the trade, okay? So, and if you've got a set parameter for where you take profit or how you take profit, you get to a peaceful time of that quite easily. So here we go. Market is starting to struggle in my eyes. It's, there's wicks forming at the top. It's barely pushing up anymore. But then again, it kind of did it here and it did it there. So this could be another pullback and another chance to push up. So anyway, let's keep going. Market pushes up and yep, that candle hasn't stopped. You're essentially like this now. This has now formed essentially like that's the CHoCH line. So if it goes below there, I'm getting out. And with a candle shape like that, sweeping the highs, it's a pin bar. It's usually my entry candle to get into a move using the FTR like elite strategy in the group. That would be my cue to get out and get involved somewhere else. So if we look at this, there's 9.83R available at the moment. Beautiful. Pulls back a bit, and I'm guessing that's the end of the run. So I think I was taken out a little bit below that, but yeah, that's where you essentially close the door on it. So really, you get to the chart for about 6:30, 6:45, mark it up between the time of getting to the chart, so it could be here, and the actual breakout happening. All what you're doing is waiting on an alert to go off. The alert, make sure your computer's on loud. You can go and do something else in the house, but just be aware of what you need to do when the alert does go off. So for those of you who do trade my methodology, you'll know exactly what to do, and it's pretty simple. It's set and forget. And the beauty of this strategy is that it's very easy to backtest it, and it's very easy to get your results. Okay, so you can see where it's profitable, where it's not profitable, where you should be setting your targets, where you should be setting your stop losses and your take profits, and how you're going to sort of feed in if you want to start doing scalings and stuff like that. It's relatively simple. It's not the most profitable strategy in the world. I think that's probably the FTR strategy. And, if you want to join me, if you want to do mentoring or really intensive coaching, or if you just want to be in an active community or you want access to my 5 courses, there's a link below. It's a wait list. I bring people in based on merit. Catch you in the next video.